I look at two things, and it doesn't seem like we're looking at the same thing. So you look at commodity prices, industrial metals, that's one, 10-year highs. You look at things like implied vol, for example, we're almost pushing towards pre-COVID levels. But then you look at the number of cases globally, and that seems to be going up. And your 7-day averages, in fact, have already surpassed the peak that we had in December and January. What do you do as a fund manager with that information?
Well, we're not fully invested currently. And by the way, thank you very much for having me on this morning. So we're not fully invested. We have some cash on the sidelines. We have different levels of overweight and underweight exposures depending on the regions. We are more overweight North Asia than in South Asia. I think India is a market that we have followed for a very long time, but we're waiting to see what happens. And to get back to your point on why prices are where they are, I think what the market is trying to digest and what investors are trying to estimate is this a contracted acute episode, or is this going to be a protracted extended episode with acute cases going from country to country, increasing in one country? The outlook, the long-term outlook for India, I think is still pretty much on track. Demand is not being destroyed in most of the key sectors. It's just being deferred. But the situation on the ground is quite poor, as you've highlighted several times this morning.
And how can that be? I guess from an investment standpoint, how can it be that the demand is simply being deferred, but this the situation on the ground in India is quite serious? And in terms of what your exposure is right now, you said you're not invested. What would you be looking to add in case you get more clarity on the ground?
Well, so our team covers many different sectors. I think the financials are what we're watching. Some of the commodity-heavy names. I'm talking India in particular.
Right.
The consumer-facing names. I think if you look at the strength in demand for two-wheelers and four-wheelers around the world, we're going to see a hiccup in India. We're seeing that already, but that is a sector that we have followed for a long time. As mobility evolves, as we get more electrification in India, it's a market we're very excited about for the long term, but currently not too exposed to at present.
Vikas, you say you're not fully invested. What would it take for you to deploy the rest of your funds? I mean, if you're a long-term investor, surely there are opportunities already.
Sure, there are plenty of opportunities. When I say not fully invested, I think the percentage of our cash is not very high. It's not as high as it has been, but it's also not as low as it has been. So I think we're always on the lookout for new opportunities. I think the challenge for investors this year, which is separate from last April, is that we're not seeing the massive dislocations in markets. We're not seeing the massive dispersions currently. So if we do sell something, what do we put it in? And I think in general, across our portfolios, we still see pretty healthy prospective returns. And so we're not trading too much currently.
Vikas, just to sidetrack a little bit, we have Nomadland winning Best Picture Oscar in what is seen as a very rare victory for Disney. Of course, great movie if you haven't watched it. I have watched that, and sobering experience. Just to continue our conversation on the markets, a lot of people are watching the dollar in particular, figuring out where it goes from here. What do you think will be the catalyst dictating whether it goes higher or lower?
I think year to date, I am a little bit surprised by the strength of the dollar against some of the other currencies, especially here in Asia. Japan is a market that we watch very closely. The year to date weakening of that currency, I probably would not have put that as my base case at the start of the year. It's hard to predict the currency. We tend not to focus so much on short-term currency or interest rate moves. What I would say is that people will be watching the Fed. I don't know what the specific catalyst will be. It is a little bit surprising, I would say, the year-to-date move that we have seen.
Vikas, I want to talk about one of your contrarian views here. Quantum computing will be used to address real problems, and that goes obviously into the whole digitalization of processes outside, of course, of tech into regular industries. What will be the best way to get exposure to that trade long term?
Okay, so I like this question. It's an area we spend a lot of time thinking about. Just as some context, if you look at the traditional silicon-based computing, the cost of production continues to rise. The demand continues to rise, not just per device, but the number of devices. So a solution in the long term is quantum computing. I think our view is that this is not science fiction. It will happen sooner rather than later, and it will be in companies harnessing it for coupling it with machine learning, harnessing it for drug delivery, I think some of the best opportunities are probably in the private markets, but there are publicly listed companies in North Asia and Japan in particular that are quite focused on quantum computing.
Vikas, I want to throw you the question of the day, which is Japan declared a new state of emergency. Of course, we heard in the likes of Tokyo, Osaka, and other two prefectures. How will that move affect assets, you think?
I don't think it will be broad-based. We are equity investors. We are bottom-up equity investors with a long-term time horizon. So I think certainly the knee-jerk reaction is to sell first, whether it is a broad-based reduction of certain sectors. I think consumer-facing, travel-sensitive, consumption-related names are more vulnerable currently, and so that's where we would see perhaps a reduction of a re-rating or a reduction of valuations.